If I had £100 to invest in 2025, I'd approach it with a beginner-friendly strategy that balances potential growth with manageable risk. First off, I'd consider the power of diversification. Instead of putting all my eggs in one basket, I'd split that 100 into three different areas: stocks, bonds, and a little bit in a high-yield savings account. Let's start with stocks. I'd allocate about £50 to a low-cost index fund, like an ETF that tracks the FTSE 100. This gives me exposure to a broad range of companies, from tech giants to consumer goods. The beauty of index funds is that they tend to outperform most actively managed funds over the long term, and they're far less risky than picking individual stocks. Plus, I wouldn't have to worry about the daily fluctuations of the market. I'd be in it for the long haul. Next, I'd take £30 and invest in bonds. Specifically, I'd look for government bonds or bond funds. These are generally safer than stocks and provide a steady income through interest payments. In a world where interest rates can fluctuate, having a portion of my investment in bonds would help cushion any potential downturns in the stock market. It's all about balancing risk and reward, and bonds can provide that stability. Now, the remaining £20 would go into a high-yield savings account. While it might not seem like a thrilling investment, it's a great way to keep some cash liquid while still earning a bit of interest. This could serve as my emergency fund or a stepping stone for future investments. Plus, it's a good habit to have some cash readily available for unexpected opportunities or expenses. Throughout this process, I'd keep an eye on my investments, but not obsess over them. It's crucial to remember that investing is a marathon, not a sprint. I'd also educate myself continuously, reading books, listening to podcasts, and following reputable financial news sources. The more I learn, the better decisions I can make in the future. Finally, I'd consider the impact of fees. Many platforms offer commission-free trading, which is perfect for a beginner. I'd ensure that I'm not losing a chunk of my investment to hidden fees, as that can eat into my returns over time. In summary, with £100, I'd invest £50 in a low-cost index fund, £30s in bonds, and keep £20 in a high-yield savings account. This strategy not only diversifies my investments, but also sets a solid foundation for my financial journey. The key is to start small, stay informed, and be patient. Investing is about building wealth over time, and every little bit counts.